Survive and thrive. Mastering market crashes. Imagine waking up one day and seeing your portfolio down 20, 30, even 40%. Stocks are crashing, crypto is plummeting, and everyone is panicking. What would you do? Would you sell everything and run for the hills, or would you see it as a once-in-a-lifetime opportunity to buy assets at a discount? Look, market crashes can be scary, but they're also a natural part of the economic cycle. The key is to not panic and instead be prepared. In this video, I'm going to break down exactly how to spot the warning signs of a market crash, how to protect your investments before it's too late, and most importantly, how to actually make money when everyone else is losing their minds. Before we dive into how to prepare for a market crash, it's important to understand exactly what they are and why they happen. See, markets move in cycles: boom, bust, recovery, and expansion. A crash happens when there's a sudden and steep decline in stock prices, usually triggered by things like economic recessions, global crises, or just plain old investor panic. Think back to 2008. The housing bubble burst, banks were over-leveraged, and suddenly, everyone realized that the too-big-to-fail institutions were actually on the verge of collapse. That's a prime example of a market crash in action. But here's the thing about market crashes. While they can be nerve-wracking, they're not the end of the world. In fact, they often create some of the best buying opportunities for those who are prepared. Remember, every market crash in history has eventually been followed by a recovery. And those who had the courage to buy when everyone else was selling were the ones who came out on top. Understanding their causes and effects is the first step to not just surviving them, but thriving in the aftermath. You might be thinking, how do I know when a market crash is coming? Market crashes don't usually happen overnight. There are warning signs if you know what to look for. Rising inflation and interest rates are major red flags. The Federal Reserve often raises rates to control inflation, which can slow the economy and lead to a crash. Weak corporate earnings are another warning sign. Mass layoffs and rising unemployment are also major red flags. By watching these signs, you can protect your portfolio before a crash. Okay, so you've learned about market crashes and how to spot the warning signs. Now let's talk about the most important part: how to protect your hard-earned money before things take a turn for the worse. The first and most important rule of investing, especially during volatile times, is diversification. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes like stocks, bonds, real estate, and even alternative investments like gold or artwork. This way, if one asset class takes a hit, the others can help cushion the blow. Next, make sure you have a healthy cash reserve. This is like your emergency fund for your investments. Having cash on hand allows you to buy assets at a discount when the market dips, without having to sell your existing investments at a loss. Aim to have at least 3 to 6 months worth of living expenses in a high-yield savings account. Another smart move is to reallocate some of your portfolio to more defensive assets as you see warning signs of a crash. Defensive assets are those that tend to hold their value better during economic downturns, such as consumer staples, utilities, and healthcare. While it's tempting to chase high returns, consider reducing your exposure to high-risk assets like growth stocks or speculative investments. Alright, now let's get to the exciting part: how to actually make money during a market crash. Remember how I said that crashes create some of the best buying opportunities? Well, it's true. When the market crashes, it's like a clearance sale on Wall Street. First and foremost, focus on buying quality stocks at a discount. Think of it like this: your favorite clothing store is having a massive sale. Are you going to complain that the clothes are cheaper? No, you're going to stock up. The same logic applies to the stock market. Look for companies with strong fundamentals, a solid track record, and a competitive advantage in their industry. One strategy to consider is dollar-cost averaging. This involves investing a fixed amount of money at regular intervals regardless of the market price. By doing this, you'll end up buying more shares when prices are low and fewer shares when prices are high, which can lower your average cost per share over time. Don't be afraid to look beyond the big-name stocks and search for undervalued assets. Smaller companies or those in out-of-favor industries might be overlooked by the market, creating potential opportunities for savvy investors. Remember to do your research and make sure the fundamentals are sound. The most important thing to remember during a market crash is to stay patient. The most important tool during a market crash is your mindset. Don't let fear and panic dictate your investment decisions. Stick to your plan. Have a well-defined plan with clear goals and a diversified portfolio. Resist the urge to abandon your plan in a moment of panic. Turn off the noise. The news cycle thrives on fear and uncertainty. Focus on the fundamentals of your investments. Think like an investor, not a speculator. Speculators try to time the market. Investors focus on long-term potential. Market fluctuations are normal. Time in the market is key. Learn from history. Every market crash has been followed by a recovery. Look, I know it can be scary seeing your portfolio in the red. It's human nature to panic when you feel like you're losing money. But the most important thing to remember is this: market crashes are a natural part of the economic cycle. They've happened before, and they'll happen again. The key is to be prepared. By understanding the warning signs, having a solid plan in place, and most importantly, keeping a level head, you can not only survive a market crash, but you can actually use it to your advantage. This isn't just about surviving, it's about thriving. It's about using these moments of uncertainty to set yourself up for even greater financial success in the long run. Until next time, stay informed, stay invested, and remember, fortune favors the bold. Look, most people see market crashes and they freak out. They sell everything, they panic, and they lock in those losses. But that's the exact opposite of what you should be doing. Remember, every single market crash has been followed by a bull market, every single one.